Poo Secret Wars. Look at that. JNJ, New York Stock Exchange. And I believe that stands for Johnson & Johnson. 5 years, weekly candles, volume, RSI. That's all I need for Stan Weinstein. Stage analysis. Interpreting the book Secrets for Profiting in Bull and Bear Markets by Stan Weinstein. And I've been doing this series for a little while now. At the beginning, I was just ironing out the kinks because that's a framework that I started, I think, in 2007. And it kind of saved my NAV. It's the first time I think I heard about money management and risk, and it was in that book. Before that, I was all over the place on the forums or penny stock land, and ooh la la, it's just a miracle that I did not wipe myself out. And so for anybody who wants a book to start that is still good today, Stan Weinstein's Secrets for Profiting in Bull Bear Markets. If you just had one book to read, that would be it. And okay, what you see now, though, I'm starting to look like that technical analysis guy who has 100,000 indicators. The ADX, I'm just putting it in because I might use it as a screener eventually to identify stage 1s and 3s. When you have under 20, maybe for a prolonged period of time, the ADX, when you go above about, it's then you start to trend either stage 2 or a stage 4. So I'm just keeping an eye on it, putting it there, but it has no bearing on entry selection, on exit signals for Stan's framework. What counts is for an A+ setup, what you need is, let's just go back. Look, the more you do, it's crazy. The more you kind of see, like, look at the 30-week moving average going up, stage 2, starting to flatten out. The price action going up above and beyond and touching it, stage 3. And when your price action is under the 40-week moving average and it's going down, stage 4. It was a very small one. After another stage 1 right here, price action up and down, flattening out the 30-week moving average. Now we had nice stage 2, stage 3. Stage 3 continued to another stage 2, and here's where we are today. So let me just check at the that last breakout that we had. Let's do this one right here. And okay, so that's A+ setup. What's an A+ setup? It's a breakout above. Okay, let's let's make like we didn't have any. So let's say I'm here today. Oh, yeah, there's not that much volume here. Well, there's a lot of increasing volume, which is very nice. Stan's rule is the breakout candle has to have twice the average of the previous 4 to 5 weeks. And I just don't see here. 1, 2, 3, 4. And these candles aren't. What you'd want to look at is look at these huge candles. So that breakout did not have. Okay, here, this one. Okay. So right now there was a nice base right here. Right here we had the base, resistance lines, breakout line, the pattern. Here's the bottom of that formation. And what we had is a 30-week moving average starting to go upwards. So right now, I'm wondering, was this a false breakout here? And then it went just back down. And then, okay, let's do it like that. Just scoot. Okay, here we are. So here's the breakout candle. Above the trend line, the horizontal breakout line, above the 30-week moving average. So that's check one. Stan calls it the triple confirmation. Here's the previous 4 weeks. Here's the green candle. It's about twice as much average of those previous 4 to 5 weeks. And then the next step is, that's confirmation 2, is the RSI going over from below the halfway point, going over to positive territory. Stan uses the Mansfield RSI. It's calculated, I think, a little different. The midway point is 0. Look, TWS, my broker, interactive broker, doesn't have that. But I'm still using this traditional RSI, and it gives me, it's pretty in sync with the Mansfield RSI, with the direction of the relative strength. So right now I have my triple confirmation. For me, this is a Stan A plus setup. It doesn't like having resistance, close by resistance on breakouts. And here's where the Ichimoku cloud comes in for that A plus setup. The little plus I added is Ichimoku cloud is support or resistance projected in the future. If you're above it, above the green cloud, you're in stage 2. If you're below a red cloud, you're in a stage 4. Red is resistance. So you don't want to have a breakout candle and have a red cloud on top. Like, there's good chances that you might bounce off that, go back in, and then you might just get whipsawed. But right now, we went above, so there's no more resistance. That stage 3 here. It's just, the longer it lasts, the more it flattens out the resistance and dissipates previous support in this case, or previous resistance that was generated here. And then you're set to go. A plus setup. And off it went. And price action kept going up. Okay, let's practice. Entry would have been right here. Investors, there's 2 techniques in Stan's book: investor's way and trader's way. And for the investor's way, the initial sell stop would have been below the formation. Traders would have been below, it says 46% below breakout line. He rarely sees good breakouts come back below that. I'm more conservative, maybe with my, I don't mind having a smaller position size by putting it further away from the breakout line. So I'd probably go below the 30-week moving average, below round number, and that'd be my protection for sufficient protection for the in case there's a pullback. So that sizing here, from entry to first stop loss for the traders, don't lose more than 1% of your NAV on that. So take the appropriate position size. And for investors, it's from here to here. And off you go. The rule is move your sell stops on pullbacks. 7% pullbacks or less, ignore them. I have to visit. I don't like that 7%. It's not it's like a ballpark figure he gave, but some stocks that have I think that's the indicator I have to look into, the ATR, average true range. Some stocks might be more volatile, and you might have to, a movement for them, a correction might be more or less percentage than just saying it's 7%. So right now what I'm doing is I'm looking at the RSI, and when I see V-shaped going up, going down and back up, then I know that's like a pullback. Then I look on the chart. I could move my sell stop here for traders, investors. You're always under that pullback, and once the price action goes back to or near the previous highs, then you move your sell stop. Investors, I would have put it right here under the 30-week moving average, under a round number. So if it's 105, it'd be 104, 95, or 99. So that's how you do it to move it up along. And if you can get in a trend line, Stan's trend lines are 3 points. 1, 2, 3. On the fourth violation, you're out half of the position. So right now in that candle, investors and traders take half of the position off the table. And if a trendline violation occurs, investors now behave like traders for exits. So they won't wait to come back to this previous sell stop. If ever they reach the trader sell stop, they're out. Or if there's a breach of the 30-week moving average, they're both out. And that's how you maximize a stage 2. Like, it could continue stage 2. I don't know. We'll move the price action along. But either case, I've noticed like 9 times out of 10, after a trendline violation, a valid trendline, 3 points, and then on the 4th point, it breaks. The price action slows down, either reverses, moves sideways, but it doesn't continue shooting up. It's like the market needs some time to recuperate. And an ideal trade for me is being in the green, reaching a target, exiting as fast as I can, and not staying there forever. Time is money. You want to take that risk and just put another trade that exploding out of a stage 2 somewhere else. This is just going down, up, and then you might just get a land on what I call an emotional landmine, sell it, don't sell it, and hang on to it. And then instead of having profits from they go all the way here, then you would end up just keeping it holding on too long, and maybe eventually reaching a lower sell stop, or even going back to your break-even point. It doesn't make sense. You've spent all this time. These are weekly candles. 1, 2, 3, 4, 5, 6, 8 months. You want that profitable trade. You want to be in the green. That's Stan's system. Is there's a lot of work every week. You have to look at the candles, reanalyze, redraw the trend line if you need to adjust. But it's a system where it's going to keep you in the green 8 times out of 10, I'm going to say. You're going to be in the green. So that's awesome. You don't have to fetch higher risk to rewards because you're scoring off in positives. It doesn't. You don't have to go look for 3, 4, 5 to 1 risk reward ratios. It's kind of, you don't really decide the risk to reward unless you use a Stan swing rule or classical chart padding measured moves, because you don't know how long the stage 2 is going to last. That's the beauty of Stan. The risk is calculated by initial position size, and as it's like that game from The Price is Right there, that mountain guy there that used to go up the mountain, and it just goes up and up and up and up. 8 months, 2 years, 3 years, and when the stage 2 is over, it winds down, then you're out. And if you had other opportunities to add on continuation breakouts, you can check out my other episodes on the Secretwars playlist on YouTube. Search for continuation breakout. There's a whole bunch of examples where you could add on along the way. So, like, there's no rush. If you miss the initial breakout, then wait for a pullback, and then a price going back up with high volume. Like the same 3 criterias, you could have them along the way, and you just pile, add on. The clue I look at for healthy pullbacks is low volume, contracting volume on pullbacks, and then expanding volume when you explode. It's like you explode hard, big volume, then you see the volume go down, and then explode again, then volume go down, then explode. That's healthy for in the direction of the trend you're looking at. Same thing on the breakdowns, stage 4s. You want that higher, lot of red volume candles on the way down, and you want contracting smaller, greener volume candles on the way back up, etc. So keep an eye out for that. And here we are today. You would have had a nice profit right there. That's why I always look for stocks that, and usually at the top of these moves here, the corrections, when there's trendline violation, usually it's on high volume. And that's a warning sign. It confirms kind of that I was right to not. So you see that high volume on the red candle right here? That's a warning sign that that pullback it might not go back up the way it is. You'd want these smaller volume candles, not a big red candle like that there on the breakout, on the pullback. And now there's a price action. Stage 2, stage 3, playing a little bit in the cloud, bouncing back up. Is it a continuation? Yeah, so now we have a stage 2 continuation. See, you would have wasted all this time in the stock getting zigzagged, and and eventually here, your sell stop would have been here. You could have got triggered right here for a lower price. You could have said, oh no, price is going to go back up. You could have removed that sell stop for whatever reason, not respect the framework. The longer you last in the trade, the more you could go crazy, like cabin fever or something there, and you just start making irrational decisions. So don't let that. The more you're mechanical, the more you respect the framework, the more you have a plan for X event, a Y response for X event, then you won't get in that situation. You start making emotional decisions when X event happens, but you don't have a plan for it, and then, whoa, you're just going all over the place. All right. Just remember, there's another day to fight every time. And here it goes. Went back again. I could go through the motions again. Goes up. See the pullback on the RSI. Move up the sell stop here. Let's just look at the RSI. Right here. Move the price action. Here also. Pull back. That's a little sell stops. Another one here. Here. And in the meantime, I could have even had a 1, 2, 3 here. You see, I didn't quite have it. Did I have? Whoa. Let's just see if I had my 1, 2, 3. Maybe this one, you considered that a hit. You could have exited a little higher than that sell stop right here at the trend line, half a position, and the other half a little bit lower. And down it goes. All right, so that's what I want to do. That's what caught my attention for J&J. Is stage 3 right now, and look, it could be a stage 4 on this candle right here. Look at this huge candle on the red. Not a good sign. Increasing volume on red candles. Let's do the triple confirmation for stage 4. Going from halfway to the other side of the RSI over the 50 point, the 50 mark. 1, 2, and which candle is this? It's this one right here. And here's the breakdown line. So there's a few things happening here. This could be considered an A plus. Let's say, just limit that candle. Create myself some black space. All right. Could have said this was a breakdown, not really deep inside, and that's why it's important to wait for the end of the week. And you see that green cloud? That's the support for Ichimoku. Just sucked back in all that all that's price action for the close to be above. But the volume's there, so Stan didn't have Ichimoku Cloud or didn't use it. He did some preemptives entries. I think like there's a breakout candle on the daily. The price action, let's say, was here during the daily. And he said, okay, go in. If at the end of the week you don't have the volume, then you bail. And that's how he did it back then. So what you could do right now, you could still wait, and yet have to wait. So that's the A plus setup. But the A plus is you don't want to have that cloud. Just take your time. Let a few candles go down. If it's really a stage 4, it's going to keep going down. Just make sure that when you play, you have a candle that's below that Ichimoku cloud. And let's see what happens. See, price action pops back up. It resists, consolidates a little bit. And then you're still in the cloud, and then you're working your way down towards it. So this is where I am today. I'm going to put my alert right here at the bottom of the cloud at the 123 level. Okay, that's for my stage 4 continuation. I'm going to put another one up here just in case the price action goes back up and we go back into a stage 3 and maybe eventually a stage 2 continuation. Who knows, right? I always look at both sides, make a case for both sides, both directions. This could well resist and price action goes back up. So if it's not this candle, then next week some of the previous support is going to start to vanish, and then there'll be less and less support. So the price action after that, any candle in that zone here, right below this line here, could be a valid breakdown for us to get that A++ setup. You see the 30-week moving average starting to go down. It's not looking good for J&J. So that's the breakdown level. A close under 123 right now is timber. Or else maybe it's just going to continue topping in the stage 3. So currently stage 3 and a breakdown, A++ breakdown, stage 4, very possible. I'm just going to give a look at the on the 10-year chart, see the prevailing trend. Okay, a whole bunch of remove all trend lines. Here's the top of the formation, and oh, okay. So we had on the monthly candle, it's already, this top of formation is already breaking down. So it's already turning over on the monthly candle. That's a lot of pressure for the weekly chart to overcome, but not impossible. And here's the next line of support for the could be here. Yeah. Here's the next line of support for the and 123. It looks pretty much what I have with the Ichimoku cloud on the other side. If you have a candle close, I believe, below that 123 level, 123.68 level, then even on the monthly, you have the backing, the benediction of the holy monthly candles, and you're ready to go. You can have that RSI going from halfway point downwards. Man, this is a hard one not to play as a stage 4, but you got to be patient. It's just April 2nd. When I publish this, it'll be April 3rd. There's a few more candles, a lot more candles for the rest of the month. But if there's a weekly close here and you have the prevailing trend in your favor, go. It's going to be a short. All right, guys. That's it for J&J. Put your alerts. They're free. Put as many as you can and keep an eye out for it. All right. Ciao.